Dividends are fantastic. Imagine getting paid to just hold stock or shares in an ETF. You could be anywhere in the world and still get that check. However, many investors fall into the yield trap and chase dividends that have high yields but little to no growth. This means that high yield today will most likely not change or grow in the next 10 years. You could get paid $10 per share now and $10 per share in the future, seriously diminishing the value of your dollar. You want a dividend ETF that will grow its dividend over time. And you're in luck, because in this video, we're going to go over some of the best dividend growth ETFs to ensure your dividends continue to increase year over year. Now, before we get started, be sure to hit that like button and subscribe. It's your favorite investor, and this is the channel to help keep you invested and build your wealth. Now, first of all, how do we find this growth rate? We can talk about any of these ETFs, but how do we actually see this? Well, I use a website called Seeking Alpha, and this isn't a shout out to them or a sponsor or anything like that, but this is a tool that I seriously use. I like to come to their website, and it's really easy. I just click on dividends, I go under dividend growth, and I can start to see exactly how they have been growing year over year. And I can see that this is ticker symbol DGRW. We'll go into that, but you can see how in 2017 they were paying 93 cents a year, $1.06 in 2018, $1.04 in 2019, so it dipped a little bit, $1.17 in 2020, and now they currently pay $1.30, or in 2021 they paid $1.30. So you can definitely see exactly how their dividend has been growing year to year in terms of their payout growth. It lays it out for you in a chart, or you can go into something where you can see their you can see the dividend scorecard, and you can go and look at the dividend growth rate, the 10-year CAGR, or the 5-year. The 5-year on this particular stock grows at 8.84%, and at the 10-year it grows at 27.6%. So definitely a dividend growing stock, and you can see that here. So that's one of the things that you want to make sure that you're understanding, and you make sure that you're doing. So we can go into something like QYLD, and I just want to show you guys how to stay away from dividend yield traps. And you can see here, when you look at the 5-year growth rate of something like QYLD, it has a negative 6.44%. This is a high yield dividend stock. It pays 9.77%, but the annual payout is $1.70. You can see that the share price is $17.46, and it really hasn't moved too much from there. When we look at the dividend growth, this payment has literally stayed consistent year over year. It hasn't really changed as much. And you can see on the chart, the annual payout growth has definitely been in the negative. If you would have bought this in 2014, you would have been paid out $2.57. Fast forward to 2022, you are still being paid out $2.18. So your dividend payment has not changed. So this to me is a yield trap. You're not really holding any value by investing in something like this. You can see now with something that has a track record like this, it's definitely not worth it. You're not going to see any kind of share price appreciation. When you go and look at the charts for the last 10 years, this thing has literally declined in value and has returned little to no value in dividend, since they are still paying that same dividend yield. But now that I explained that to you, let's get into the DGRW, the Wisdom Tree US Quality Dividend Growth Fund ETF. This is a fantastic dividend fund that has a 1.87% yield. It currently pays out $1.25. It's actually not too expensive, but not too cheap. It currently trades at $67.17. The dividends has a growth rate, a 5-year growth rate around 8.84%, and has a 5-year total return of 69.59%. So not doing too terrible. But when we go and compare it to SPY, it's definitely not an outperformer, but doesn't do a bad job of keeping up with it. So it's not the best place to put your money, but DGRW is a dividend growth ETF that you should definitely check out. Next on the list is DGRO. DGRO currently has a share price of $52.16, a dividend yield of 2.36%, with a dividend rate of $1.23 per year. So every share that you hold of this, every year you should expect about $1.23. If we go and look at the dividends, they have a 5-year growth rate of around 10.64%, so slightly better than DGRW, and they have a 5-year total return of 57.72%. So the yield is pretty similar to DGRW. The growth is actually underperforming DGRW, but the 5-year growth rate is actually slightly better in terms of what DGRW is able to get. So when we compare this to the SPY over the last 5 years, we can see that it does underperform the SPY in terms of share price. Next on the list is ticker symbol SCHD, almost my favorite, probably everybody's favorites on YouTube. And we can go and we can see that their yield is 3.549% with a dividend rate of $2.60, currently trading at a share price of $74.59. Dividend yield over the last 10 years is 11.32%. If we look at the 5-year growth rate, 13.92%, just fantastic, almost 14%. And the momentum, the 5-year total return is 66.25. So a lot like DGRW, it has that same kind of price performance. And when we go and we look and compare it to SPY, we can see that over the last 5 years, it has pretty much kept up with SPY, slightly underperforming it by about 10 cents. But keep in mind that it does have that fantastic share price, that fantastic dividend growth. So if we were to look at total returns, it might just be on par with the SPY. So definitely something to look forward to. I think that this is one of the premier dividend ETFs, especially if you're looking for dividend growth over the long run. VIG, the Vanguard Dividend Appreciation Index Fund. This ETF is actually one of the pricier ones on the list, currently trading at $163.77. It has a dividend yield of 1.9% and a dividend rate of 3.11. The 10-year dividend growth rate for this ETF is 7.88%, with a 5-year growth rate of 9.89%. So definitely not top of the list, but still has pretty nice dividend growth. Almost 10%. You can't complain. 5-year total return has been 63.64. And let's go ahead and let's compare this to the SPY, and we'll see that they have been pretty much performing right there with them over the last year, and over the last 5 years, definitely right there with them. They're underperforming by about 4%. So nothing too major, but they definitely have been growing their dividends. I want to say they also grow it. SPY grows its dividends as well, but I want to say that VIG has been doing a better job of growing its dividends. And last on the list is VYM, the Vanguard High Yield Dividend Index ETF. This currently trades at $107 and has a yield of 3.10%, so one of the higher ones on the list, and they pay $3.34 per share. 10-year dividend growth rate is 7.13%, and the 5-year growth rate is 6.08%. So you guys can see I keep on going over to the dividend scorecard on Seeking Alpha. This is one of my favorite ways of finding what the growth rate is, over the 3, 5, and 10-year periods. It'll also tell you how many years of consecutive different dividend growth it has, and how many years of consecutive dividend payments it has. And if you're signed up for premium, it'll tell you pretty much what kind of grades they have on their scale compared to all of the other ETFs that pay dividends. Momentum, 5-year total return, 43.82%. I think that's one of the worst on the list. And if we go and compare it to the SPY, definitely underperforming over the last 5 years too. It only has a price appreciation of 23.29% over the last 5 years. So definitely not one of the better ones on the list, but it is another one to go and see if there is a buying opportunity. Just because it hasn't outperformed right now, you might want to go ahead and take a look at some of the holdings to see if this might be worth putting into your portfolio. So definitely some good ETFs to check out. I hope you guys are interested in the dividend growth, just because of the way that this plays out. For me, the way that I plan to invest in dividend growth is using ticker symbol SCHD. And I just want to show you guys exactly how this plays out. We'll go back, look at ticker symbol SCHD. We said that the 10-year growth rate was 11%. So I'm going to choose a modest 10.5%. And we're going to plug this into the bestdividendcalculator.com. Our price appreciation, we're going to stick with 10%. We'll go back, look at the chart. Over the last 10 years, it's had 124% growth. So if you divide that by 10, roughly about 12%. We'll keep 10% here. We'll say we're going to have a zero initial investment. We'll commit to putting in 15 a year, and we're going to see what this ends up putting out for us. So at the end of year 30, should be roughly about 4.7 M's with a dividend payment of about 150, with a 3% dividend yield, 10.5% dividend growth rate, and a 10% capital appreciation. So if we can get anywhere near to some of the numbers that SCHD has been showing within these last 10 years, you can definitely put together a pretty nice portfolio just doing that. So for me, I'm just holding on for it, staying steady, and just continuing to chip in and buy these good dividend stocks. So definitely something like SCHD is in my portfolio, but the other four are definitely top contenders that you should check out and just see what kind of holdings that they have and see if maybe some of those should be in your portfolio. But anyways, if you made it this far in the video, hope you got some value from it. And be sure to check out thebestdividendcalculator.com so you can see how these numbers will end up playing out in the future. And of course, thank you for watching. Be sure to hit that subscribe button for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.